Okay. Okay, so let's just start. Surinder Baji, you ready?
Yep.
Cool, cool, awesome. Um, so we're gonna talk about today pre-construction homes, like its projects, its opportunities, as well as mortgage for pre-construction. So we have a team from Sunland. Me as a Baljeet, I'm preferred partner with Homes by Avi. I have worked with Morrison Homes before. And with me, it's Ami Chu. She's working with me since we created Sunland. And from Mortgage, we have Surinder Pal from the Mortgage Center. Okay. And so today's content is like, it's all about like investing into housing for pre-construction, as well as like if you want to buy to live in as well, you know. And second, we're gonna talk about the mortgages. We're gonna focus on pre-construction mortgage only for today. Just in case if you have any question apart from pre-construction, you can definitely get in touch with Surinder later. Next is we're gonna have um, So next we're gonna have is questions round. We already have some questions from our participants. And as well as like in between, if you have any question, you can raise your hand or type in into the comment box and we will add it to the questions at the end. Okay, so let's just get started. So this is Calgary basically. As you can see my cursor. So this is basically downtown inside. Calgary is kind of divided into 4 quadrants. So this quadrant is northwest. This quadrant is northeast. Down here we have southeast, and this side we have southwest. Um, like pre-construction, it's almost like new communities. Whereas like we can't really build within the city because the city grows towards outside. So that's where you can see with our pinpoint marks, these are kind of the new communities which is currently under construction. There are some more, but we have included the ones which are very famous and as well as like which are actually growing in a faster pace than others. Um, Later, we're going to discuss about how these communities differentiate from each other. What are the builders, like where they are building, what kind of projects and what kind of constructions they are doing within those communities. As well as we're going to talk about transit map as well. So like we have mentioned, we have more than 200 communities in Calgary at the moment. Whereas some have infills, like they like couple of builders, they're building somewhere here down here, but these communities are not as fast paced and growing at the same speed as the other communities down here. Okay, so this is future rapid transit network. This is basically a 30-year plan, development plan. This is way under Calgary Transit, so we have no control as us like over this. But they are currently building this green line. They are currently going towards south before north, so they're gonna build towards south first, where they're gonna connect Seaton, Mahogany as well, and Mackenzie, and later they're gonna go up towards Livingston side. Here we have our airport. This blue line is already here until Settletown, where they have further planned to extend it up. So this blue line goes towards southwest, or you can say West Calgary. And currently they already have a red line here, which goes to northwest as well as southwest until Shaughnessy. So this green line, I would say, can probably gonna take about 10 years, if I'm not wrong, maybe more. But we can see that they have planned other connecting networks within city. Like this actually shows that the city people, they are actually working to grow the city. since like it's a 30-year plan, the city definitely gonna go towards more outer side, but the black line you see outer, so this is kind of the city boundary. Everything everything outside this, it's not Calgary. It's so on the east side as well as the north side, it's Rocky County. And towards south we have Okotoks. Up here north we have Adrie. Towards west we have Cochrane, and east we have Chestermere. So by the time I think that they're gonna complete this, I think we definitely gonna get connected to those cities as well. So which we can see, like we can say like they gonna grow with the pace where like those cities will get connected in future. So let's talk about certain communities, which are actually growing. We're going to talk about all four quadrant one by one. So currently we are talking about Northwest. So Northwest has Glacier Ridge, Ambleton, Livingston, and Carrington. So in these communities, like Carrington is the oldest community among these, which is almost completed, and it's mostly under Matme Homes. Livingston has kind of all other builders at the moment, like Brookfield, Cedar Glen Homes by Avi, Logal Homes, Morrison Homes, and they actually have different products as well: condo, duplex, land, front garage, and estate homes. Same goes to Ambleton as well as Livingston is the most newest community in this area, which they have just started putting roads and the sidewalks. They don't actually have anything built yet, so they're gonna have a new phase coming up very soon, where they're gonna have Calbridge Homes, Genesis Builder, and Mackey Homes, Sterling Homes, and Logo Homes. So so in these actually builder list, Calbridge and Mackey Homes, they are new to Calgary. So it's gonna be interesting looking at what kind of product they build and what's the build quality look like, because they'll be actually competing against Genesis and Sterling, which are like older builders, as well as like Livingston is literally next to it, and they're gonna have definitely a very good competition between. And Glacier Ridge. So Glacier Ridge is kind of very famous community among Northwest because like the concentration of East Asian people down there. This community is next to Nolan Hill and Sage Hill, where like those communities, they were actually about like 10, 15 years old, and they haven't seen any new community down there for about like this time, and people are actually very excited to see this, and that's what we can actually see with the pricing as well. It's towards higher end among all the Calgary boundary. Okay, and next we're gonna go. Okay. So yeah, so as I have already discussed, Ambleton and Glacier Ridge as well. So in Ambleton and Glacier Ridge, they have Broadview, Sterling Homes, Shane Home, Trico, J-Man Street Side Development. The products they are doing is front garage, lane, and townhome. So not every community has all the products. Like we have seen in Livingston, they were actually building condos as well, where we don't see Ambleton building condos. Maybe in the future, but not for now. These communities like Ambleton and actually Livingston is like smaller communities than Livingston and Glacier Ridge. Same as when we go towards Glacier Ridge, we see Cedar Glen Homes, J-Man, Morrison, Shane, and Trico. We see bigger names like in nicer communities, because they are the one like try to actually get hold of those lots to make sure like people like they can provide them the nicer and experienced builder, and they can charge same accordingly. So we're gonna talk about more of like transit network towards this side now. So like I have already discussed that this green line gonna start from basically right from downtown, going to go up towards north. So right here, this side is northwest, and this towards this side is northeast of Calgary. It's going to go up to Livingston, where like they are actually developing that area accordingly to have the transit in future. I'm sure like we can start see something coming up like in near future, that they are already working like towards south as well. Um, Whereas like this blue, this gray line we seeing, so this is future. I'm not really sure how they're gonna come up with this, but definitely this is very future, and it's gonna be later than green line. Okay. So let's go towards east of Calgary. We call it East Hills. You can call it northeast, the northeast, southeast part as well. You can divide from right here. Um, they have Belvedere and Huxley. Um, so the only difference what I see down there is this area is very close to downtown. It's literally like 15-minute drive to if you want to go to downtown, as well as like they already have a commercial in place, which actually has Walmart and Costco right next to Belvedere community. They put a commercial before they actually started putting a community down there. And if you go towards east, further east, you will touch Chestermere, um, which is very closer, like about like 10 minutes drive from Belvedere to Chestermere as well. Um, um, this community is like has builders like Alliston at Homes, DS Homes, Crystal Creek Homes. They are also, I won't say like they're new to Calgary, but they are very fresh builders too. Crystal Creek Homes, they've been into the market for a longer time, but the other builders, they were actually building outside Calgary, and that's where like they started to come in. And this the road we're seeing right next to Belvedere is stony, so which gives you very nice and great connectivity within the city. Okay, same goes to Huxley. They also have a bridge planned to connect to Memorial Drive in the future. Again, I'm not sure like how much time it's gonna take. We have seen another community which is upper, like right next to Huxley, upper here, which is called Homestead. They also had tried to connect the bridge. It took them like 4 years to get approval for that. But again, like if you ask me, technically they have great connectivity on 17th Avenue already, so they don't probably need bridge that soon. But yes, it's on the way just in case if someone is looking for investment, for longer term, like they don't want to rush on that. So next we are into southeast. So this picture actually shows southeast and southwest. We're gonna talk about Mahogany and Rangeview. So Mahogany is the older community. It's a lake community basically. They have man-made lakes down there, and it's the biggest man-made lake in Canada. Um, and this community definitely shows that because it's expensive. It does charge for the lake as well, but I like it depends. It's everyone's personal choice. This community is almost at finishing stage. I think another 3 year and it's gonna finish. They do have schools coming up very soon, but there's another community which is Rangeview, very next to Mahogany, have high potential. The prices are a little bit lesser than Mahogany and give you wider range, as like Rangeview has Bay West Homes, J-Man built Homes by Avi, Daytona, and Hopewell. Whereas like we can see again in Mahogany, Hopewell is there, J-Man is there already. The apart from that, they have Excel Home, Mountain Pacific Homes, and Local Homes. So as we have two communities right next to each other, there's like same builder building, and if we see that they do have front garage, they do have lane, they do have townhome as well as duplex in both the communities. They compete with each other, but the moment you don't have that competition within that builder, like say Homes by Evan Rangeview will give you better pricing apart, like from JMan. So it's about like comparing those builders among and seeing who gives you the best value within that community. Okay, so we move forward. So now we are into Seaton and Wolf Willow. So this is Seaton right here, Wolf Willow. They both comes in southeast only. But as you can see, we're going towards southwest, but still they fall in southeast. The good thing about Seaton is they have a hospital down there. So the community is actually still building under construction, but they already have a hospital, which is like very rare because all the hospitals in Calgary, they are like within the city range and way towards an inner side of the city, except only this hospital, which is here. So if I talk about that hospital, the connectivity to the hospital from Mahogany and Rangeview is very, very good. Like specifically Rangeview is like, it's about like 5-minute drive to the hospital. And if we talk about future transit line, it's gonna come until Seaton only. So we have that connectivity giving towards Seaton as well. It got an upper hand on it, and it does show on the pricing as well. Whereas like if we talk about builders in Seaton, it got Avalon, Brookfield, Casadena Place, Cedar Glen Homes, JMN Built, Global Homes, Trico, Rohit Communities. And the product they are doing is front garage, land, duplex, townhome, and condo. So as you can see, like we have discussed before, like JMan is literally in Mahogany, as well as Rangeview, as well as in Seaton. So it is very interesting when you go see those builders like in all three communities, and the pricing they give is very, very moderate. Like it's kind of very similar to each other, but like I'd love to go to other builders as well, and all these builders they are really good. As per the build quality, because the only thing we see is like what kind of build quality they give, what kind of price they give, like and the lot position, which is really important. When we choose a particular lot for pre-construction. Next is Wolf Willow. So Wolf Willow community is actually very nice. I personally like it. It's very next to our Beauview River. This community is actually in a flood zone, but they rise that community for about like if I'm not wrong, about 12 feet. They have risen it. This community has never seen flood yet. It is under the flood zone map in Calgary. If I personally really like it. It is next to golf course. It has dog park, very, very nice walking area, like ravine and river area next to it. They're pushing like if I talk about the builders, sorry, if I talk about the builders down here, they have West Creek Home, Shane Home, Jim and Morrison, Trico, Lookmaster, Cove Properties, and Truman. Like among this, I can see 4 builders are here which are in top 5 list of Calgary, because they're trying to push this community. It is very nice, and the product they do is like front garage, lane, duplex, and townhome. So you see everything is they're building down here except condos, because I personally think they don't want to put too much pressure on the ground, because they have risen this community already. That's why you might not see condos, but definitely other products are there, and with the good builders. This also have a connectivity to Legacy and Walden down here, to connect to Stony as well. Okay. So let's talk about the future transit map. Like I've already mentioned that the city is already working on green line. So this is C-train line. It's going towards south. They're going to build towards south first before they're going to build towards north. So it's coming until Seaton, which you can see South Health Campus as well. So I think that's where the last stop gonna be. We don't have exact location yet, but I'm sure like they're gonna come out with that point very soon. So it's gonna connect back to Auburn Bay, Mackenzie, Prestwick, Quarry Park. So this is the area where I told you before that there's one two builders, they're building this area, but this is under industrial. We're not gonna talk about this one because they this area reflect higher pricing as well, and it doesn't really have the greatest connectivity. They mostly build townhomes, like they try to build townhome because it's within the city limit, and they wanna use that area better and try to, like, builders anyhow, they wanna try to make more money uh, from what they I'm sure, like, even the land is expensive down there too. Okay. So next community is Legacy, which is very next to Wolf Willow. So this still falls under Southeast Calgary. So down here we see is McLeod Trail. Anything towards the west of McLeod Trail is the Southwest Calgary. So Legacy has um, Remington Homes. They actually build condos. Crystal Creek Homes, Shane Homes, Homes by Avi, Sterling, Trico, Morrison, West Creek Homes, J-Man, Luxuria, Look Master Builder. So you have seen more of builder building and Legacy, as well as, like, you can see with the product wise estate, front garage, lane, duplex, townhome, and condo. So they have all the products down here. The reason behind this is Legacy is very big community, um, and this community actually been building from last 10 years. They are at almost completion stage. I think another 2 3 years and it's gonna complete. um, it's very well planned community as well. This is the only community in whole Calgary which doesn't have red lights. So they mostly have roundabouts. Sorry, I'm just gonna drink some water. Yeah, sorry about that. So and this connectivity, like this McLeod Trail, goes straight to downtown. So I think we're talking about an 20 25 minutes to downtown from Legacy. Okay, let's move forward. Let's go towards Southwest Calgary now. So we're going to talk about Silverton, Belmont, Sirocco, Pine Creek, Queequeg. So you probably can see that it's not a big area, but now we have about like 5 communities we talked about. Um, Here as well, like, you will see in all 5 communities, you see kind of every builder is there: Cardell Homes, Logo, Genesis, Anthem, Street Side Development, Shane Homes, Homes by Avi, Jamin Built, Morrison Homes, Trico Homes, Cedar Glen Homes, Sterling, Truman. Um, they have front garage, lined duplex, townhome, and condo. You probably don't see estate home because this community is not building accordingly. Um, but the it just like the land was owned by different people. When developer tries to buy those lands, those people sell differently. That's why they had to come up with the different communities, but they're literally very next to each other. Those communities are not too big as compared to Legacy. I think Legacy is bigger than all 5 together, but the connectivity to like within those communities is very very good. Um, as you can see, this 130th Ave connecting to McLeod Trail, which goes towards downtown, like I said before. And up here we have Silverado, which is already developed. And this actually connects to further Southwest Calgary. Okay. And so this is the transit map. So red line is already there until Somerset, Bridlewood here. They have extension planned to Silverado as well as 210 Avenue, which is next to Belmont. So this is Belmont. Down here, we're talking about Pine Creek. So this extension will give access to transit to these communities, these 5 communities altogether, as well as Legacy, which is right opposite down here. Again, this extension, we don't know. probably about 10 years we're talking from now. And next is Alpine and Vermilion Hill. So these are also the newest communities. They were introduced early last year. This is the Calgary boundary, and they have extended this. The land up here comes under reserve land, so we can't touch it. We probably can't build anything anywhere in future. But these two communities, like, they are kind of like uphill, where you get nicer views to the downtown Calgary. These communities also comes with a little bit of price tag, where like Homes by Dream, Cardell Homes, Calbridge Homes, and Genesis Builder building in Alpine Park, and they have townhome laned rear garage. So this is the only community where we actually see rear attached garage homes, as well as vintage front garage home. They also comes with that price tag. They do have a condo fee to do those homes, just because they don't have any roads in front of the home. So you basically access your home from the back of the garage, and the front of the house is towards the park. So basically, it's not towards the park, it's like literally on the park. So you go out of your home from the front, and you have a park in front. And that's where, like, all those homes all together, they own that park, and they pay condo fees to maintain that. And next is Vermilion Hill. So they have Shane Homes, Homes by Avi, Broadview Homes, Sterling Homes, New Vista, and Genesis Builder. And they only doing front garage, laned, and duplex. So they don't have a townhouse planned for Vermilion Hill for now. Maybe it's gonna come in future, but like I said, like, these communities are a little bit uphill and upstick. So that's where we see the price as well, compared to the previous communities. We talk about Belmont, Silverado, Sirocco, and Pine Creek. Okay. So next is so until now we just talk about all the new communities in Calgary. Now we're going to talk about the process, how you can actually buy a pre-construction home. So this actually very different from a resale home. I'm going to go straight into it first. That talking about how different it can be from resale. Because you are building a home, you're building something from scratch. So we actually get to choose the community builder lot. Whereas, like, in resale home, like, we go into resale market and see what is available on the market, and then we try to compete with other buyers. Whereas, like, when we actually buy a pre-construction home, we might have to compete with other buyers, but like I said, like, since there are more builders and more lots, we can always wait for the right time and right opportunity to do that. Okay. So let's go step by step. So first is choosing the perfect location and community. So this is very important. It totally falls under your need. What is your need? Where you want to put yourself within the city. Like, same builder in different communities can have different prices. Like, if some builder, if a builder A is building in Northwest, and the same builder building in Southwest might have a different pricing. So it is very important, because this can be based on the pricing, as well as the need, as well as the connectivity. If you have kids, you need to access the schools as well, or if you don't drive, you need to access the transit. So those things depend on what that community is offering. So we actually go find the community for us first, so that we figure it out, like, where we actually gonna set up. Okay. And next is, like, the second step is, like, finding the right builder. So when we actually find a community which matches our need, there are, like, many builders. Usually there are, like, at least 3 to 4 builders building in that community, and we get to choose. Sometimes they don't have lots available, but again, like, it might be coming in the future. But this will help is, like, it will help us by going through the pricing and making sure that the floor plan they offer is matching our need. So I'll give you example. Like, let's say for townhome and duplex, you might not be able to make any changes on the floor plan at all. So those builders might not allow. But for like front garage and lane homes, they might be able to take some suggestion from you if you want to do any changes, but those changes come with a cost. So if you want to do if you ask builder to do any kind of changes on the floor plan, they will definitely gonna charge you based on it. Depends how much hours they're putting to make those changes. uh, but like I said, like for lower homes, for the starting homes, they won't allow. That's why like it is very important, like we shop around builders and see which floor plan matches the needs, the best needs for us. Okay. And next is securing financing. So as soon as we find the lot, the community, the builder, we what we do is like we go to a mortgage broker and say this is the lot, this is the builder we want to buy from, this is the price, and the mortgage broker actually give us a heads up. Like going through our file, give us a pre-approval, a heads up, like yes, we are eligible to buy it. Um, so that we can plan accordingly before we actually buy it, so that because it's a long time, um, from starting to until getting a possession can take about 12 months, and everyone's situation can change in between. So it is very important that we get that advice from the mortgage broker and make sure that we can afford that home. Next is personalizing your dream home and selection. So this, when we buy pre-construction, this actually give us an opportunity to select our interiors. So we can actually plan. Again, we come back to townhome and duplex. We might not be able to make any changes on those homes because they are low budgets. But yes, some builders they allow. But in generic, we're gonna talk about, yes, they're gonna let us select our interiors and exterior. So like we can choose, we can pick our colors, we can pick the type of exterior we want to do, as well as interior. Definitely they comes with some price tag. So they builder usually have standard. That means like they give you like 4 or 5 options as a standard, that this is the thing we give as a standard. It comes with zero cost. But as soon as we jump into and liking something else, it might comes with a price tag. So usually a buyer actually spend about $5,000 to $10,000 on an upgrade inside within the house. Okay. Next is committing with the down payment. So what happens like is like when we actually select a lot with the builder, we actually write a contract. So that contract comes with a condition that we're gonna secure financing and gonna give a down payment to the builder. So this down payment is usually 5% and can go up to 10% depending on builder requirement. So these terms we don't decide. It's through the builder. If builder says 10%, we cannot bring him down to 5%. We have to give a 10% down payment to them. So so within that condition period, we actually go to mortgage broker, get the pre-approval, collect that 5% down payment, and give it to the builder. And the moment we give a full 5% down payment or 10% down payment required as per builder, the deal go firm. That means the house is ours. The moment it's gonna finish, the builder gonna transfer the title to the buyer. So next is waiting for your home. So while waiting for your home, like because from forming the deal until getting the possession can take about like 10 to 12 months. While waiting for your home, the best is like to make sure that we don't open any credit accounts, we don't buy cars, we don't open like credit cards or line of credit, because it can bring our credit score down, as well as like buying a car can higher the debt as well, which might not be very favorable for ratios, GDS and TDS ratios. I'm sure like Surinder can talk better on this. And next is navigating the final stages. So as soon as there's like 35 days to go to the possession, builder send out a letter to the buyer that your possession is due. So at that time, what we do is like we go to mortgage broker or the bank. We get our firm approval based on the possession letter. And we actually chose the lawyer as well. So the bank will send all the documents, as well as builder will send all the documents to the lawyer, and we go sign, and we basically take the possession. So I just want to talk one more thing in between is like, what if someone is not in Calgary and they want to buy a pre-construction home? How would they make sure that the builder is doing all the right things? So throughout the process, actually, builder has to go rigorous steps to make sure that home is safe, livable. City actually do inspection at every step. So basically, they inspect electrical, mechanical, building envelope, as well as plumbing. So they inspect a home about like 10 times while that process, to make sure that the builder is following all the codes, like which is set up by the city, to make sure that house is livable. As well as, in case if you see any issue, you can always raise your concern to the builder. And that's why like it's very important like to have a realtor in the place where the realtor like actually go visit the homes and make sure like everything is fine and correct. Okay, so I'm just gonna give you some examples. So this is very interesting because um, we definitely see in a resale market, we definitely see the price going up because you can see the history. Like a house was sold last year for 100,000, and this year is selling for 200,000. But in like pre-construction, you don't get to see that thing until that house goes to the market, right, for resale. So I'm just gonna give you examples. These are my own deals. So I have zoomed in. So this particular deal, the total price of this price was 564,163. This deal happened in May. The very first deposit of $1,000 was given on 31st of May. Okay, whereas the similar home was sold in September 2023 for 622. That's why it is very important to pick a right builder, a right lot, to make sure we are actually following. We are actually following our goal. So like when we actually deal with the buyer, we get to know like what are their goals, why they actually want to invest, so that we make sure we follow those. So next example is townhome. So this deal happened in early September. We got a client a townhome for 402,443 as a total price, whereas the November 18 pricing is, so the similar home, if where you can see my cursor, is like 450. So that again, this buyer has made about like 48,000 literally in 2 months. Okay, and next example is a condo. So this condo was again sold to my buyer in September, early September, and my buyer got this home pre-GST for 292, because they don't write GST numbers. Sometimes builders make things a little bit different to lure the clients, like show lower price, but it's not really. So like say 292 900. Whereas, so this is the model, whereas like the November pricing is 314, like say 315. So this buyer has made about $25,000. So it is like I said, it is very important to pick a right pricing, right? Being a preferred partner with Homes by Avi, I get to I get to know some pricing, some projects which are actually lower than the market and has higher potential. As well as like I have worked with Morrison Homes, like I have sold from their office. I get like I have seen the construction from beginning. Like I used to go see those houses very often and make sure like everything is fine. I'm very familiar with all the materials they use, and the construction type and construction time. Sometimes, like if builder is saying that they can finish a construction in 12 months, maybe they can finish in 8, because usually home shouldn't take more than 4 months to construct. It just because the harsh winter here in Calgary can delay things, as well as lumber or material. So next, we're gonna quickly talk about a couple of things for pre-construction homes. So we have Alberta New Home Warranty Program. So as soon as you buy a pre-construction home, you fall under Alberta New Home Warranty Program, which actually covers warranty of 1, 2, 5, and 10 year. It's different set of warranties. I will show you a little bit later in a video what they cover. But it's free of cost, so we don't have to pay this. Next is change in personal situation. Like I said in the beginning, that construction of a home can take about 10 to 12 months. It is very important that we follow and make sure our situation stays the same. We don't take any kind of debt on us, okay? But like since say everything is based on our jobs, right? So those situations can change, and it's not under our control. But we make sure that if anything changes, we convey this to our realtor, mortgage broker, and see what we can do, and what is best in that situation, and how quickly we can change that back again. Next, we're going to talk about closing cost. So the closing cost, they are actually very similar to resale homes in Alberta. Since in Alberta you don't have land transfer tax at all, so the closing cost will only be if you want to do a home inspection for a brand new home. Being into this market, and I have sold with the builders, I don't really recommend that you don't necessarily need inspection. But if you really want to do it, it will cost about like $400 to $500, depending like what kind of product we are buying. Next is lawyer. So some builders, they actually cover lawyer cost. So you might not be paying anything to close your home. But some builders, they don't. So we take on an average of about $2,000. It's going to cost us for having a lawyer in the deal. So those lawyers basically help transferring funds from bank to the builder, as well as transferring the title, and they make sure that there's no error in the title, because a small error can cost us like big times. So they actually have those insurances in place in case if they make any kind of error, it's gonna go towards favor of the buyer. Next is assignment sale. So assignment sale, if anyone don't know, is like you buying a pre-construction home, and you want to sell it before you get a possession of that home. So this is very famous in Ontario as well as in BC, but it's very unlikely that you can do assignment sale in Alberta, because actually it's the very straightforward answer is no builder allows assignment sale here. There is one builder who allows, but they charge 3% of the value of the price you're gonna sell in the future. So I won't really recommend having thinking about assignment sale and buying a house in Calgary. So next is GST, new housing rebate. So this actually through federal government. So the very, very basic thing for this is like the value of the house should be below 450,000. Anything above 450K, you're not gonna fall under GST rebate. So and you won't have any house pricing for matching this in Ontario at all, or BC, but here in Alberta definitely you can get those condo and townhouse buyers of mine, they actually got housing rebate. If I go back quickly, if I show you here, so this line here, they got housing rebate. So this is minus $3,965. So they got this money back. as well as see this condo contract, the buyers got 5,272. So you probably can see that this townhome was expensive and the condo was cheaper, but the condo guy got higher rebate. So this rebate is actually based on the price of the house. So there's a calculator calculating GST rebate. So you can literally put any pricing down there and see how much money you're gonna get back. It's basically you don't get it. You don't get the cash back. It's just like you pay less. Okay. So next is like I was saying about new home warranty. So 1 year covers material and labor. So anything like in the house is covered. Though though for 1 year, builders also cover. So anything actually happened to the house, or like you want any kind of repair done, you can actually reach out to the builder and they will get it repaired. You don't have to approach this warranty program at all for that 1 year period. So next is 2 year, which is like delivery and distribution system, like plumbing, or like electrical lines. So they cover for that. Next 5 years building envelope, like all the exterior of the house. And 10 year for structural, is about like the foundation of the house. So I'm just gonna quickly show you a video where you can see. Just give me a second. Yeah, just okay. So there's a quick ad in the beginning. I'm just gonna skip it. Just give me a second. Okay, that's weird. Okay, looks like. Did you guys able to see the video at all? No. Okay, I'm gonna share back, and since there's no voice, wait, just give me a second. Yeah, I'm gonna switch back. Uh,
The Alberta New Home Warranty Program is Alberta's most experienced and trusted home warranty provider with close to 50 years of experience. The insurance coverage provided is through the New Home Warranty Insurance Canada Corporation. We stand out as Alberta's premier new home warranty provider. Our home builder members must meet the most stringent membership requirements in the industry, meaning they are the best of the best. Our top-notch coverage includes the 1, 2, 5, and 10-year mandatory coverage that has been legislated by the Alberta government's New Home Buyer Protection Act. Defects in labor and materials are covered for 1 year. This includes things like flooring, trim, paint, drywall, sidewalks, cabinets, tile, and countertops. Your home's distribution systems have 2 years of coverage. Heating, electrical, and plumbing systems are all considered part of this. The building envelope, which separates the outside elements from the interior of your home, such as wall framing and cladding, roof, and window installation, is covered for 5 years. And finally, the structural elements of the home are covered for 10 years. This covers defects that result in the failure of load-bearing parts and include the footings, foundation walls, load-bearing walls, beams, floor systems, and roof trusses. It is important to understand the terms and conditions of your new home warranty and what components are included in your policy coverage. To learn more about our home warranty coverage, the differences in coverage for multifamily versus single-family dwellings, plus other products and services, please visit our website, anhwp.com.
Okay. Let's head back. So yes, like I mentioned earlier, this is mandatory program. Builder has to give you new home warranty, but again, not all the builders falls under this program at all. So we actually get to know if we can actually ask the builder if they give us warranty. But this is definitely like gives a very peace of mind that what we buying is protected for 10 years. Okay, how we jump back? Sorry, give me a second. Okay, so this is the team. Me and Emmy, we work as a team as Sunland Real Estate at Sierra Realty. This is our office address and phone number and website and email address, just in case if anyone wanna reach out to us. Next is we're gonna jump onto the mortgage part for pre-construction homes. So I'm gonna hand over to.
Hey everyone. So this is Surinder. I'm a mortgage advisor licensed here all over Alberta. So just let me know how to get the slides. Okay. So the first thing is why you should listen to me, right? So I don't work with the bank. I'm with the brokerage. So we do have access to a lot of different lenders: TD, Scotia, ICICI, Strive, First National. There are a lot of those. So what's the benefit of working with the mortgage broker? Is let's say you go to TD, right? They're not gonna say you like around the corner, Scotia is giving you a great rate, just go there. So, but with me, we can arrange that, right? We'll just check your credit once and you'll get access to all the products from different lenders at just one place. So on the experience side, even on our team, we have people with more than 20 years of experience in mortgage industry. So they know their stuff. It's not like they'll misguide you or you'll have some questions that they can't answer. It's like saying, done that, been there. They have done it all. Even for this year only, we have worked on more than 100 mortgages. So they are doing quite a volume. They are doing pre-constructions. They are even helping people on work permits because there's so many myths out there that you can't buy on a work permit. There will be different scenarios with a person with a permanent residency, citizenship, or on a work permit. So we specialize in those cases also. We help every kind of people. We have enough expertise. So yeah, so let's start on the mortgages. So what we are gonna cover in today's presentation is what are the benefits for a first-time home buyer in Canada, specifically in Alberta. How the mortgage application is created. What are the three pillars? The first one is income. Second one is down payment. What's the difference between the down payment you are doing? Either is it 5%? Is it 20%? Is it your own money? Is it gifted? How much down payment can be gifted? Those kind of questions. In the end, we'll cover credit history, how that is calculated, how your credit score matters, and how you can create a great credit score before buying your house. So with the pre-construction, this is the one of the things that we get is we have enough time before our house closes. Let's say when you like submit a purchase contract with the builder, you get into a purchase contract, you may not be ready for the house. But the benefit of pre-construction is you have enough time. Let's say a year, right? 20, even let's say you book right now in 23, you'll get your house in next year, right? Around November, December. So you have enough time to figure out all those things, income and down payment and your credit score. So let's start with first time home buyer benefits. There are around 4 to 5 things that government helps you with save money and work smartly. The first one is RRSP, retired registered saving plan. Then first home savings account, TFSA, first time home buyer incentives, and home buyer tax credits. So the RRSPs. Can you do the next slide, please? Yeah. So the RRSPs, they stand for Registered Retirement Savings Plan. So this plan is basically for the first time home buyers. What you can do is you can put take 35,000 out of the RSP for per person. Let's say you are a couple, then you can do $70,000 per both combined. How the RSP works is when you like deposit money in RSP, you get the tax credits for it. And how the limit for RSP is decided, it really depends on how much income you are making. Let's I can give you a rough example. Let's say you are making $100,000 and you deposited 10,000 in RSP. Then you will be getting roughly around $2,500 from CRA back into your own pocket. That's how much difference it can make. So with the RSP, there are two or three things that you need to keep in mind when you are planning to go with this account. First thing, you at least you have to have your money deposited in this account for a minimum of 90 days. So that's one thing that helps when you're booking a pre-construction because you have enough time, right? That money doesn't need to be from last year or from a lot of long time. Just 90 days is enough. And the second thing, as much as down payment you take from your RSP account, you have to put it back in next 15 years. So this is the basically the RSP. The other one is first home savings account. This is a really a fresh account. Government of Canada just started this April only, from 1st of April. So with this account, you get all the benefits from the RSP account, but none of the disadvantages. This is again for the first time home buyers only. Whenever you put money in this account, it works the same. You can get tax credits for the amount you're depositing in this account. There's a deposit limit on this account. You can only deposit $8,000 per year per person. If you are a couple, then you can deposit 16,000 in total per year. This account carries its limit forward into next year. The total amount you can deposit in this account is in next 5 years, you'll be able to deposit $40,000 in this account, 8,000 per year. Let's say you don't deposited 8,000 this year. Next year, this year limit plus next year limit, you alone can deposit 16,000 here. So if we go back to our same last example, if you're depositing 10,000 into your RSP, and with this year 23 and 24, you can deposit 16,000 again there. So your total down payment, it's gonna be around $26,000. And with $26,000, you'll be getting roughly around $4,500 back from CRA. So that's like making around 25-30% on your money just before even buying the house. So that's how it works, like working smartly, right? The appreciation you will get later, right? But you'll start saving before even buying the house. So the drawback from RSP doesn't come here. You don't have to give this money back into the account, and there's no particular period how much long you have to hold money in here. You can just like deposit the money right now, and next week you can just take it out. You'll still get the benefits. You don't have to wait like 90 days as in the RRSP. So the next account, it's a TFSA. It's tax-free savings account. The I would recommend personally just to like maximize those two accounts first, then come to this account. So this account doesn't give you tax credits off the bat, like when you invest deposit money here. But let's say you deposited money here, then you started investing. You have a whole year, right, before your property closes. So whatever the percentage of money you grows in that year, you don't tax there. So let's say you deposited 10,000 here, your money like growed by 10%, $1,000. When you take your money out, you will not get taxed on that $1,000. So that's the third option. Only use this option when you have used those two options and you still have your money left. That's the way to use a TFSA. Don't do the deposits first into TFSA, then RRSP, then first home savings account. Just go backward. So the next benefit that first home buyers have, it's uh, it's the first home buyer incentives by CMHC. So how they really want to help you buy a place, right? They don't want people renting out there. They really want to like contribute into your growth. So how they are helping with you is they are doing either 5% or 10% of your down payment for you when you are buying your first home. When you are buying a resale property, they will help you with the 5% of the down payment. When you're buying a pre-construction, they will even help you up to 10% of the down payment. So what's the catch in there? The catch is they'll just have the same as the same down payment they'll have a same share in your property. You don't have to pay from your own pocket. They will just have like that percentage of ownership with you. Let's do a like rough example. Let's say you purchased a $500,000 house, and you only have $25,000, only 5%, right? So, but you don't qualify for 475 mortgage. You only qualify for, let's say, 425 mortgage. So you can really go with the CMHC option. They'll help you with 10% of the down payment. What are the benefits, right? You'll ask. So the benefits are, the first thing, you are buying your house. You are not renting. If you are renting, you are just wasting your money. Like if you are qualified, it's really a great idea to buy your own house. So but you had limitations with your income or either your down payment or either your credit score. So they're helping you, first of all, buy your house. The second thing, when they are, you may think that you have to get that money back. They'll take your appreciation when your house, like when you will sell the house. But the things that we don't really consider is, first of all, let's say they take 10% of the appreciation, right? But you are keeping the 90% of the appreciation. So you are in good hands, and you even like did less down payment than them. They did 10%, you only did 5%. So you are keeping 90% of the appreciation. The second thing, you only pay them back either when you sell your house or after 25 years. Let's say you lived in that property for 3 years and you are kind of investor mindset. After that, you really planned to have your property as a rental, and you moved into another property. Your condition, like your condition improved, you made some money. So those kind of stuff with uh, when they just take the appreciation. Let's say when you like start renting your property, they will not take any partnership in your rental income. That's all yours. So that's two plus points. And and the negative people say that they'll take 10% of the appreciation. If you really think about that, it's really good to have them as a partnership than having some other person co-sign for you. You may qualify for the mortgage with a co-signer, but there are really complications when because let's say after only 6 months or after a year, you don't qualify for the whole mortgage, but the other person, they want to buy their own house. They just want their name out of your mortgage. So what you're gonna do? Find another co-signer? How long that circle can go, right? But here, they are there for you. How much time you want to be? When you want them gone, they'll not ask you any questions. They'll just take their share and go. So how you can qualify for this incentives? So there are not so many requirements. First one is you need to be first time buyers. The second thing, your household income should not exceed $120,000 per year. So what I mean by household income is, let's say, husband's income plus wife's income. They may be getting a CCB if they have kids. So those three things combined should not exceed $120,000 per year. How the repayment works? So the repayment is either when you sell your house. Second thing, let's say you don't so do not you don't plan to sell your house. You just want to keep it for a long, long time. Then after 25 years, when your mortgage matures, matured means like when you have paid off your mortgage, at that time, whatever the value of the house, you pay 10% of back to the CMHC. There's one other option too. If let's say after 2 years, 3 years, you have enough income with you, you have saved some money, and you want CMHC to just go and leave your house to yourself. So the other thing is we can really do a appraisal at that time. Whatever will be the appraised value of your house, you can just pay 10% of that to CMHC, and they'll just leave you alone. You'll have your house for whole. You may know, right? There are penalties when you break your mortgage, but with the plan that CMHC works, the incentives, you don't have to pay any penalties. You can just give them money back any time of the day. So the last thing the first time home buyers get is the home buyer tax credits. So whenever you buy a house, uh, next year when you file your taxes, just tell your accountant you bought a house, you get $10,000 tax credits. So it's same as getting either your tax credits from first home savings account or RSP. You are getting a lot of money back when you buy a house. These are really some small things that you really have to combine to get a big impact from those things. So like let's say you deposited 10,000 into RSP, 10,000 into TFSA, 10,000 credit here. So on $100,000 income per person, you got $30,000 credit. So it's like to CRA, you only made 70,000. Whatever you you pay taxes on the above 30,000, you get all of that back. It's kind of your furniture free for you, right? So now let's go to the three pillars of the mortgage application. The first one is income. Second one is down payment. The third one is credit history. Uh, You can't do the application without at least having two of those. So there are so many options because we do work with so many lenders, right? So if you really want to just go with the bank, they really just want the cream kind of thing. They just want the top-notch applicants, top-notch clients. Those have great income, those have great down payment, those have great credit histories. They don't want to bother with the people with either bankruptcies or either consumer proposals. There are so many people. Those have some missed payments that they didn't even know about. So we'll cover all those things under here. So when we talk about the income, so there are really two types of income. Either it's you can go to the next slide. Yeah. So there are actually two types of income. The first one is from a job. You are working for someone, you have your hourly job or a salary. When you get your payroll, it's your taxes and everything, CPP, employer insurance, it's already deducted. That's income from a job. So the how the income calculated from that kind of employment is the minimum requirement the bank wants to have you is you'll be working there and your position is out of probation period. So the probation period means uh, until the time you are under probation period, a company can really fire you without giving you a notice. Mostly, uh, I would say 99% of the companies, the probation period is 90 days. Maybe a lot of you guys have heard that, like after you only need checks for 90 days and then you are good to get a mortgage. I would say that's a half truth. You really can't do that, and you can do that too. So even you have to be like really sure that you are out of your probation period, because mostly the city jobs, the federal jobs, they have 1 year probation period. It happened with one of my clients too. What really happened was he submitted an offer. It was a resale property, and like when they showed me the papers and everything, he was a city transit driver, and he just got his job like around 4 months ago. So he thought like he's out of probation, but he was still under the probation. So he really have to withdraw his offer and wait another 8 months to get his property closed. So that thing you have to make sure. The other thing is the payroll stuff, right? So you really can't get 3 months of payroll for let's say 10,000 and you are working as a cashier. It doesn't make sense there, right? At least whatever your job is, it needs to make sense. Even we really did some applications with even just on first payroll. It really depends on your background, how much experience you have in that field. Uh, Sorry, what company are you working with? Like how old is the company? How much big is the company? Let's say you are working with the Apple, right? Apple, Google, maybe General Motors with Mercedes, something like that. And you have a job that is hard to fill. So even at first payroll, your application work. But on the other hand, let's say you are just working as a cashier on a Tim Horton, that's easy to fill jobs, right? So on those, banks really need to see a history there, because they just don't want to believe that you are that important to the corporation, that important to the company, that they are just having you full-time permanent position just on first payroll. So the second income is business for self people, the people who are running their own corporation, or they are just taking straight checks on T5s and filing their tax at the end. So the people that are really common under this category are truck drivers, Uber drivers, Skip drivers, or like mechanics that don't want their check to be taxed before they get the money. So they take their money under a corporation, then they file the taxes at the end. In this situation, what the bank like to see is 2 years of track record of your income. So how your yearly income will be calculated is they'll take, if your income is increasing year by year, they'll take average of those. Let's say in first year you made 50,000. In second year your business growed, and now you are making 100,000. You file tax for 100,000. So the average of that's gonna be 75,000. They'll take 75,000 as your annual income. On the other hand, let's say first year of the business you made 75,000. Second year you made, maybe something happened because like COVID, or you were not well, you only made 50,000. So the bank will only take 50,000 as your income and proceed with that in mind about your application. There for the people that are in business for self, there are other options too. There are alternative lending options. Though in when we get into that area, you really don't have to even have a track record of 2 years of business operating time. You really can have 6 months of operating income, and they can get you qualified. They are a little bit expensive from the banks because they just want to take a little bigger risk as comparable to banks and make a little bit of money too, right? So now, so once our income is cleared out, let's go to the second part. It's down payment. So when you are buying a house, the down payment is a like must thing that you really have to do, and it plays a lot of things. The first thing, let's talk about if you do less than 20%, even a 5% down payment. So the some people just see it as like just a regular thing, but it's really a privilege that a government of Canada is giving you to buy your house. Just really think about it. On a uh, $500,000 house, you are just giving 25,000, and banks giving you 95% of the loan amount just to get you a house. That's how much helping the banks are, how much of the government wants you to grow. So, but they want to play it safe too, right? They are also in the business of making money as everyone else thinks, right? Even if you see inside you, you are also in here to making money. You are buying a house, you can save because you can save rent. So how banks get like their security when you are doing a 5% down payment? They want your mortgage to be insured, and then comes the mortgage insurance companies. That's either CMHC, Canada Guarantee, Sigan. We have three of those in Canada. They'll pay you, uh, they'll get mortgage premium from you and pay the bank if anything happens. Let's say you're doing 5% down payment, the mortgage default insurance is gonna be 4%. On a $500,000 house, you are paying $25,000. Your mortgage premium is gonna be around 16,000. Let's say you are doing 10% down payment, your premium will be reduced to 3.1%. You are paying 15% of the down payment, your premium will be lowered to 2.8%. When you do 20%, you don't pay uh, any of the mortgage premium there. So this is the like benefit of doing 5% down payment. uh, Really is you just need lesser money, right? You only need 5% of the purchase price to get into a house. The mortgage insurance company will borrow on behalf of you. The second option is doing a 20% down payment. So why do a 20% down payment? The first thing is you save your money there and mortgage premiums too. You don't have to pay any premium, so you save that money. The second thing, on a 5% down payment, you can only get your mortgage up to 25 years. With the 20% down payment, you can really extend your mortgage to 30 years. So with by extending your mortgage 5 years to like 30 years, your monthly expenses are gonna be lower. So that helps you in managing your financials. The second thing, by doing 20% down payment, is you're on a, let's say the same example, $500,000 house, you are giving them 100,000 as a down payment. So right now you are only paying interest payments on $400,000 only, as comparable to when you are doing a 5% down payment, you are like making interest payments on 495. So you are saving a lot of interest there too. So that's one other way to do 20% down payment. So, and the third thing is when you do 20% down payment, the banks know that you have enough skin in the game. So they are kind of inclined towards your application. They know that you are putting your money down to into the house. They are like little eager to help you. The last thing is the credit score. So what really is a credit score? Credit score is the like marks that credit unions give you on how responsible are you with the money. How long have you been managing the credit? How great you are handling the credit. That's really what credits your credit score tells you about you. So how what's the minimum credit score you need to have a really like to have a really great deal from a bank, the best interest rates, the best policies, the best prepayment options? Its minimum is 680. After 680, even your buying qualification will be lowered by the bank. So how do you get a great credit score? The first thing is how much long were you had the credit cards, how how many credit cards you have. So the golden rule here with the credit cards is you need to have at least two credit cards for minimum of $2,000 each, and you only use 30 to 40% of that limit you have. So let's say on a 200,000, $2,000 credit card, you you must use only up to 600 to $800 per month. Pay it off, use it, pay it off. Don't miss any payments. Don't go over limit. Never ever go over limit. Even if you like really need the money, just you can really go to 70%, but don't go over limits. Don't miss any payments. Never miss any payments. Just do minimum payments if you don't have enough money in that month or anything. So these are particular the ways to like have a great credit score. The other thing is it's a common misconception that if you have a car payment, or if you have a, let's say many people have student loans, right? If you have a student loan payments, your mortgage qualification will be lowered. It's not really about that. In a mortgage application, all the things just revolve around two things. There's a GDS ratio, there's a TDS ratio. How the GDS is calculated is all your expenses, like regarding your house, divided by your yearly income. The second thing, the TDS, how it's calculated, the house expenses plus your loan payments, either your auto loan or anything else, those divided by your yearly income. On a 100,000 salary per year, you are allowed to have around $416 per month payments. So let's say you have a car, and its payments are maybe $400 per month. You are good to go. You don't need to pay that off. So like whenever you are doing a mortgage application, just don't pay everything and then talk to a mortgage broker. Always talk to a mortgage broker first. Then you will know like, do you really need to pay that loan off, or is it good just out there? Because it's sometimes, let's say you have a $20,000 loan and it's the payments are only $300 per month. Sometimes it's better to put that 20,000 into your down payment instead of like paying your car off. Sometimes you like, right now the interest rates are really high for a car loans, but if you have bought your car 3 years back, you may have just got it for 1% or 2% loan. So it's not a great idea to pay that off. Instead of like doing paying a loan for 1%, just do a down payment where you'll be like paying interest on 4, 5, or 6%, right? So that would be a great idea, not the other one. So I would say always talk to a professional before making any type of moves on your own, because when you really plan to go with the pre-construction project, right? So the biggest benefit you get there is you have time on your side. You don't have to rush things around. You have enough time to make your income. So like a lot of people that like the pre-construction projects are coming from different provinces. So mostly whenever you are moving from other province, you really resign there from your job and you start a new job here, right? So if you buy a resale property, you have to really have to wait, and your job may need some time to get you qualified. But on a pre-construction side, again, the time is on your side. You have enough time. You know like where to find a job. Even if it takes like 2 months to find a job, you still have roughly 8, 9 months to get those things into order. There are like advantages on the credit score too. Like if you go by these rules that I just explained, you can even increase your credit score by 40, 50, even 60 points per month. So it's just 680 you need, right? There are many people, those have lower credit scores just because of higher credit utilization. They never missed any payments, because when we are negligible about these things, we really don't think that we'll need that thing, need the credit history and everything. But when it's time to use those things, we need time. We need at least 4, 5, 6 months to get those things into order. So if you have any missed payments in the past, just pay it off. Just wait some time. Don't miss any payments in the future. You'll get all things back. So that's it from my side. So if you have any questions, you can really ask me right now.
Okay, thank you, Surinder. We're gonna move forward. We actually have a couple of questions from our clients already. We're just gonna answer. So we'll just go one by one and see
Okay.
if it's for you or if it's for me, right? Um, So this first question is: suppose you purchase a pre-sale property, and at the time of closing, the bank appraises the property at the lower value than the purchase price. In such a scenario, you may need to use your own fund to cover the difference if you intend to secure the loan from the bank. So the question arises: is there any method to assess the project's value that aligns with the bank's criteria? I'll just cover a little bit part of that. So technically, no. You have to come up with that value, which is difference between the appraised price currently than what you have purchased for. The reason behind it is like we can never actually know what bank gonna assess the value in the future, because the value of the house depends on the market, and no one can actually predict what like no one can actually guarantee what will happen. Yes, we can predict what might happen. So to make sure, like it's very important, like we actually go around and figure out the market, and try to buy something which actually is not at the higher end of the market pricing, so that we will never fall into that. criteria where we actually have to come up with more money to close that home, which you can probably see is happening in Toronto and Vancouver at the moment.
Yes, like I've even read some news. There were like people, those were burning the houses that builder were like still in construction because of the same reason. They at the it's really about doing your due diligence, right? When you are purchasing a house, you really have to responsible about those things. We can advise you professionally, but some people really just go with the higher end kind of things. So those are the products that like got affected by market crashes or those kind of things the most.
Right. So let's just move forward to the next one. Is there typically a difference in the time frame for completion and delivery between the condominium houses, such as townhome, semi-detached, and detached? And the next is if I invest in pre-construction, is it possible to transfer the investment before receiving the property handover from the builder? They're basically asking for assignment sale. So I'll answer those two questions. Um, Currently in Calgary specifically, I don't see any difference between a townhome, semi-detached and detached, possession time. Most builders, like say for example, Excel Homes, they're actually building in 7 months nowadays. Whereas some other builders like say Shane Home Morrison, they're taking about 10 to 12 months. Doesn't matter what kind of product you buy, it's gonna take the similar kind of time. And the next is about assignment sale. As I've already mentioned earlier, no. The very straightforward answer is no. Don't ever think about like you're gonna do assignment sale, and you're gonna buy on the basis of that. Make sure if you actually have something like that in mind, talk to realtor, because sometime like you think at the back of your head that you might be able to sell it, whereas it might not be possible. Yes, some builder allows, but it's like they don't write on a contract. So it's totally about like having that kind of relation with the builder as well as the area manager. But the very straightforward answer is no. No, we can't do it. Okay. Next is which area of Calgary house is still worth investing in? Okay, this is very interesting question. I would say it totally depends on your need. Why you buying house? What do you want to do with it? Are you want to live in it? You want to invest? You want to invest it short term? You want to flip it? You want to invest it long term? You want to put it on rent? Like it totally depends why you want to buy. Based on your criteria, we will know that what kind of property is right for you, which area will be right for you, and then we will figure it out among those areas which will be best for you. Again, it's a search based. We try to make sure, like at the end of the day, we want to make sure that all our clients make money. No matter what they're buying. Why we there in the deal is to protect them, is to make sure like they make most out of it, and that's what our focus. Like if the number work, everything else works. Okay. So in near future, when interest rates decreases, how will Calgary real estate market be different from now? Again, this is actually the most interesting question. Um, uh, so I would actually want Surinder as well to answer this from a
Yeah.
different perspective, but let me cover this first. So what is currently happening in Calgary is a lot of people moving down here, like even the interprovincial move, as well as like new immigrants, whereas like Calgary haven't seen that kind of move in last 10-15 years. So it's very different for the Calgary, as well as like I don't know if you guys know, like the Calgary, actually Alberta overall has promoted itself to move down here. Like people, like they were encouraging people from Ontario and BC to come here, whereas like when it comes to Alberta overall, Calgary is the place where everyone wanna move first, and Edmonton comes later. Because the city is bigger than Edmonton, it's newer. Calgary has, among all the cities in Canada, is the youngest population. Uh, um, it is not growing as fast pace as Toronto, Vancouver, but I can see like it has potential. It is giving its best at the moment. They are really working on everything. Yes, things takes time, but I see good future for Calgary. So what happens like when there's demand? So at the moment, Calgary is like about 23 year behind the construction demand currently. So the moment we if the interest rate fall, so the buyers which were not qualifying today, they're gonna qualify tomorrow. Tomorrow means not tomorrow. Whenever the interest rate's gonna start going down. So the moment they started to qualify for higher value, they're gonna jump into the market again. So that's where like we're gonna see more competition, and we expect to see again the prices started to go up. It is actually so with the winter market the prices are kind of still, but we still see we those see multiple offers on certain properties. Like I saw a property with my buyers 2 days ago, and they had 11 offers on it. So even if the market, like we are into winter market, we see multiple offer on certain type of homes with a certain value. Above that, the market has definitely slowed down, but with the interest rate going down, it's definitely gonna affect on the buying side. Whereas like we see more buyers, and again it might get into sellers market.
Yeah. So if we really predict the how much time it's gonna take to like the interest rates getting lowered, so mostly every professional right now, every like economist, even the economist from Bank of Canada, they really are predicting the interest rate to be lower around mid of next year. So around June, July of next year, 2024. So on the perspective of like buying qualifications, I would say like when people were buying in 2020 or 2021, they were really qualifying for their income multiplied by five. Let's say a person have a $100,000 income, they were qualifying for $500,000 mortgage. So as of today, right now, as the interest rates have risen so much from like couple of years, right now the qualification just dropped to 3.8 only. So let's say a person having $100,000 income, it's right now they are only qualifying for $380,000 of mortgage. So that's just having everything same income, same employment, same down payment, everything same. They just can't qualify for that much. That's the I would say that's the only reason that's holding people from buying as of today. On the demand side, let's say if I get 20 calls a day, I would say 15 of them are from out of premise clients. Those really are just trying to move here or just moved within a month or two. So they are already looking for the houses. So I would say we we are just seeing around 6 to 8 months of time frame until the if really the interest rates come down, the city is gonna boom. That's really my perspective. There, no one can guarantee anything, right? But that's really my perspective.
Okay, thank you. The next is condition for first time home buyer mortgage. So if you can, Surinder, if you can cover a little bit
Yeah,
on this.
for sure. So for a first-time home buyer mortgage, there are only those accounts that I talked about, the RSP benefits that we can really qualify for on a first-time home buyer basis. The first home saving account, and the third was the tax credits that we get, $10,000 for per person. Other than, let's say if a person is qualifying for a second time or even like third time and the first time, those criteria are really same. They'll assess your income the same, the down payment is the same. Some people really think like the 5% option is just for the first time home buyers. It really is not. It's the requirement is you are buying your primary house. That's the option with 5%. So the criteria and the conditions, the interest rates, everything is same. Either you are buying for the first time or the second time. The banks don't differentiate.
Okay, thank you. Let's move to the next one. Is it possible to buy a house in Calgary with a work permit? Do I have to pay any additional taxes? How to get mortgage pre-approval? So I'll answer the first two, and then you can answer the last part. So yes, you can definitely buy a house on a work permit. So the federal government, they actually came up with the legislation earlier that on a work permit you cannot buy, but they made changes very quickly, that if you actually have a work permit for 183 days available, you can actually buy a home. So the only thing we have to keep in mind is, like, specifically buying a pre-con on that is, if you have a work permit available for, like, say 2 year, you're buying pre-con today, and by the time you actually gonna get the possession of the house, you need to have 183 days again. So it cannot be like the moment you actually writing a contract. It's both. So the moment you're writing a contract, as well as the moment you're taking a possession of the home, you need to have 183 days available, and you will be able to buy a house in Canada. Do I have to pay any additional taxes? No, there's no difference between buying a house on a work permit or as a PR or as a citizen. There's no difference at all. The only difference, I would say, I'm not sure about this, maybe at the mortgage part. If bank would like to see more than 6 months, maybe Surinder can cover on that. But yes, other than that, no, there's no difference at all.
Yeah. So on the work permit, as Baljeet told, only the requirements are you must have 183 days of work permit left on the day of your possession, more than 183 days. The second thing is, let's say you're doing 5% down payment. So that 5% cannot be a gifted down payment. Like if you're a PR or a citizen, even you don't have any money, you can get all the down payment gifted. On work permit, the first 5% should be yours only, from your savings, or like you sold something, like your car or anything. Just it should be yours. On top of that, let's say you're doing a 10% down payment, the other 5% that can be gifted. So these are really the two things that you have to keep in mind when you're doing like you're planning to buy a house on a work permit. There's no additional taxes in Alberta. In Ontario and BC, there are home buying speculation taxes, land transfer taxes, those kind of stuff. On the mortgage side, like let's say on the end, some people really think like there will be policy difference on work permit or PR or interest rate differences. There's nothing like that. They don't really differentiate while giving you money.
Yeah. Okay. Thank you. So we move to the next one. My husband and I have a full-time work permit. Can I buy a house? And if I can buy it, how much can my husband and I borrow? What is the interest rate we have to pay? Thank you very much. So this is very similar to the last question. Maybe you can answer, Surinder?
Yeah, for sure. So yes, for sure. Again, if you are on a work permit, you can buy. Only need more than 183 days of work permit on the day of possession. So the interest rate is kind of really tricky question. I can't really quote you on that because there are difference in mortgage products that you are looking for. Like I don't know how much down payment are you planning on a 5%, on a 20% down payment. The interest rate differentiates. The first thing. The other thing is, what are your plans for the house? Are you gonna hold it for 3 years, 5 years? Those really make the difference. So I would say really to specify a little bit about those, and then I can give you like more accurate numbers of on the interest rate. As of right now, I would say you can really get between 5.5 to 6.5. That would be a rough number.
Okay. Thank you. We move to the next one. Okay, okay, so this is actually from the example. When did you get that 402K apartment? Okay. If I borrow a house for 25 year and I pay after 8 year, do I have to pay off the entire value of the house? Will I have to pay a penalty if I find how much is usually? What does the closing cost usually include? How much do lawyer fees usually range? So I'll answer the first and the last one.
Yeah,
Surinder, you can take the
I
second.
can cover the second
Um,
one.
Yes. So yeah, we closed that townhome for 402 in early September, where you can actually see that it's up to 450 now. If a buyer actually comes to me today that they want to buy that same apartment, I might not actually suggest now because I'm seeing that apartment that townhouses towards the higher range. We will look out for like finding better deals. But again, yes, like this, the price can speculate that quick. Um, and the last one is how much is the closing cost? So, like I've already mentioned in the beginning, so for pre-construction homes, the closing cost would be about like um, uh, doing an inspection or like lawyer. So lawyer can cost anywhere about like $2,000 on an average. Depend. It also depends like how much is the purchase price of the house. Because they have to get the land title transfer, they have to get title done, they have to transfer all the funds from the bank to the builder. So it costs them money. So it can go it like lawyer can charge you literally $1,500 as well as like $2,500 depending what is the purchase price. If it's like towards the lower end, we are looking at anywhere about like 1,500-1,600. So, but like take an average of $2,000. Other than that, like I mentioned earlier, is inspection can cost you about 300, 400, 500 again, depending on the size of the house. But it is not necessary. Um, if you ask me that should you do it? Yes, you can do it if you have money. Is it necessary? No, it is not necessary at all. So yeah, these are the closing cost.
Okay, so on the second question, like if I would say if your plan is to really pay off your mortgage in 8 years, every mortgage when you like buy a product on the mortgage side, every mortgage comes with the prepayment options, like how you can pay off the mortgage faster. Usually they come in 10 by 10 double up, 15 by 15 double up, and 20 by 20 double up. What that 20 by 20 or 15 by 15 means is on a 20, let's talk about 20 by 20. You can pay 20% of your principal amount per year without any penalties. So let's say on a $500,000 mortgage, just for the easy numbers, I like the example of $500,000 mortgage. You can pay $100,000 per year without any penalties. If you want to pay more, you have to like give out the penalties. So you are planning to do it in the 8 years. So even if you can go with the 15 by 15, 15% of the principal amount per year, after 5 years, you can just renew it, renew your mortgage for 3 years and have the same options. You will not pay any penalties. But if you want to make a bigger deposit towards your principal, you would have to pay some penalties.
Okay, thank you on that. Next is when buying a project house, will the title of the house and the land that house be in my name or the name of the bank? Okay. So when will the lender keep the original documents of my house and the land ownership, or does the buyer have the right to keep them?
Uh, I can really
Okay.
answer the question.
Okay. Yeah. Sure. Please. Yeah.
Yeah.
Thank you.
So how the things will work is the title of the house will be on the buyer's name. So if you are buying the house, the title of the house is gonna be under your name. So the mortgage amount, whatever you get the mortgage for, the bank will put a covenant on your title. You can't really sell the house before paying them off. But if you go to a title office here in Calgary, you pull your title search for your house, it will show your name on the house. And
Correct.
for the second question, you can really keep it's all online. But if you want to keep those like hard papers at home, you can really keep the paper. The bank don't have their name as owners; they just have a K1 on the property.
Right. Yes, so there's nothing called, I think, original documents
Yeah.
here. It's basically everything is literally with the land title. Like Surinder said, yes, the property will be under you, and there is no difference that a house and a prop as and a land. So the land will include the house, and it will be under your name. The bank will be on your title. The moment you sell your house, you cannot hide your money. So the money will go first to the bank. The money will pay off the mortgage, and whatever is remaining is come to you. So that's how it happens. And basically, you don't do anything to do that. Everything has been taken care by lawyers. So they are
Yeah.
the one who actually take care of those things. Okay. Next is the purchase price of the pre-construction home given by the builder based on the current market prices or based on the value when the house is completed. Okay, so this is interesting. I have seen a couple of builders where they actually sell you future prices, but some builders they actually sell you current based on current market value. It totally depends like what is your intention when you're looking to close. Like I said, like we always have options. We don't only like listen to you and like give you one option and we like take it or leave it. We give it options like and this get interesting when we actually do market research. Um, as I said, there's some builders they actually charge you future prices, like whereas you see some numbers are $100,000 higher than the current market price, because you're getting possession in 3, 4, maybe 5 years. We don't have tons of projects like that. Usually I would say 99% of time, you're getting possession of a house within 10 to 12 months. Only 1% of chances, like specifically for high riser building in downtown, you're getting possession in like 3, 4 years, maybe 5 years. That's where like it gets expensive. Okay. And yes, this is it. Thank you for. There's one more. There's one more. Okay, so there's one more question.
So I have one
Any
question for Surinder.
Yeah.
Yeah, for sure.
So Surinder, I have secured one property with Baljeet, and the possession is near about June and July.
Okay.
And right now we are in Montreal.
Okay.
And right now we have one property with almost the same price, more than that, and we are planning to sell that property hopefully in like in Feb or March, something like that. So my
Okay.
question is like right now we don't have any kind of job in Montreal. We are on the EI. Like we lost our job 2 months back. Right now me and my wife, we both are on EI. So we are not searching right now job in Montreal because we are planning to move like in the month of Feb, March or April, whatever. So my question is like uh, when we are planning to move, when we move the Calgary, how much like the pay stub and how much the income we need to for the you know.
Um, how about Surinder will contact you directly?
Yeah, that
You know,
would be like
because this, yeah, because I think it's gonna take more time to discuss
yeah,
everything.
Mm.
And it's gonna be very personalized as well,
yeah.
right? Um, I do have a question here. Is any chance property will be affordable in Calgary? Um, I I would say like Calgary is still affordable when we compare to like outside Calgary, like cities in Canada. We are still below. We are literally still below the average Canada average pricing. Um, it totally like again like these things depends on supply and demand. So the demand is higher at the moment. That's why like we see the prices shoot up very quickly. But like I said, like as we compare other cities like Toronto, Vancouver, Montreal, Ottawa, we're still on a cheaper side, and being a big city in Canada. So yeah, I would say it again. It's totally depend, like what are we looking to buy, why we are looking to buy, what is our plan with that property. Depending on that, we can definitely find something which fits your budget and range. Okay. I'm gonna send out all the slides and the recorded video on an email so that everyone can have it with all the contact numbers. If anyone wanna contact Surinder or me or Emmy. Okay.
Yep.
I think Surinder, do you wanna add anything?
That's all. I
Okay.
would really say, like, if anyone have questions, just feel free to contact me.
Yeah. Okay. Awesome. Thank you so much,
All
Emmy.
right.
Okay.
Thank you.
Thank you.
everyone.
Thank you for
To
joining
everyone.
us. Thank you so much.
All
Bye.
right. Bye-bye. Have a nice weekend. Stop recording.
Just enjoy the rest of your Sunday.
You
Yes,
too.
thank you.
Thank you.